Hey, deal makers, welcome to the show where it's all about financial freedom with real estate. Let's do this. In today's episode, we're talking with Ryan Kindred and Russ Cannon, and two of our most recent deal makers in our mentoring program that just raised $1.9 million, their first time they raised money to close on an amazing $4.6 million deal. So if you want to learn how they did it, then this is the episode for you. So Ryan Kindred is a former electrical engineer with an MBA from UNC, and at one point, he was managing $200 million worth of power distribution assets at BASF Corporation. I don't really know what that means. He sounds like a smart guy. And today, though, he's managing over $7 million in real estate. That's pretty cool. Now, Russell Cannon is his business partner, and he comes from a background in construction safety, managing massive $100 million industrial projects. And they work actually at the same company right now. And today, he owns and operates a growing $5 million portfolio. And together, these guys closed a 240 unit self-storage deal. It's not a multifamily deal, self-storage, which is very interesting in itself. And they raised $1.9 million to make it happen, which is even more interesting because they've never done that before. And they did it all as first-time syndicators. So it's pretty cool. And really kind of go deep on this one and on how they kind of got together, why they're partnering with each other, and then how they came about finding this deal. And again, since I've been doing this since 2014, it has never been easy to find a deal. And it's the same thing here. You gotta underwrite a number of deals, and they did. And they were a bit opportunistic because while they were looking at multifamily deals, they also came across a self-storage. And the honest truth is that getting into a different asset class like a self-storage is actually not much different than getting into a multifamily. We talk about that as well. So hopefully you'll be inspired by this episode on getting started and doing a larger deal right up front. Let's get into it with Ryan and Russ. Yeah, Ryan, you as a capital raiser, you guys raised $2.1 million, which is a lot to raise for a deal. So while
Mhm.
Russ is talking to brokers on deal flow, what is your activity like?
Yeah. So newsletters, more newsletters, constant communication with either the active investors or potential investors. It's kind of, the way we started it, and not to get too far into the deal, we did the 506B where it's family and friends, previous relationships, right? And we knew we needed to start there anyways. We didn't have a track record to be able to solicit just accredited investors off the street that didn't know who we were. So, uh, you know, just talking to anybody that already knew me, kind of bringing up real estate, talking to them, educating them. I think education's a really big part of it, and that's something, again, that's rewarding part of this experience. I mean, the audience on the webinar, I mean, they're here because they want to learn more, right? And I think that's from our perspective or from mine, definitely is to just educate. And my ideal scenario is we have somebody that invests in our deal and is involved enough to learn about either your program or how to do a deal themselves or find something or evaluate it to where they become a GP, right? And now we can invest in their deals. I think one of the best steps for sure that Russ and I have both taken is invest in other deals and see and get to be a part of how they communicate, what they do for their investors, learn best practices. But yeah, so the combination of all those things is how I help, nurture investors, continuously, develop things that kind of don't happen by themselves in the background, whether that be the website, drafting up informative newsletters, not just updates on existing, deals that people are involved in. But yeah, that's kind of what I'm doing.
Yeah. Well, let's talk about that first deal, Russ. How did you come about with that deal?
Man, long story short, I've probably underwritten over 200 multifamily deals, and I wasn't coming up with anything. The market was bad. It was a tough time for that. Some of the deals that I knew that were going across, I was being told by the brokers, hey, this group came in with 80% down payment, et cetera. They're just parking money in places. So after several months of doing that and having to put it down every once in a while for a few days just to kind of get my mind back wrapped around it, one day I just decided, you know what, I've always liked storage. I've always thought um, that there were some opportunities with it. So I just started underwriting some storage deals. Why not take a break from multifamily? The process is the same as far as from the underwriting tool. The expenses are obviously different, but the concept is there. It's the same. So I started underwriting deals and I got through about probably 25 or 30 deals where the deal that we ended up buying popped up. And I thought, oh, that looks interesting, and it was semi off market. When I say that, like they sent it to me and then like 12 hours later put it on the market. But I had a chance to immediately get in front of it, and it's the only deal that I've ever underwritten that came up with every single number that we could fathom, touching in the green as far as being in the clear for the minimum expectations we wanted as for returns, cash on cash return, refinance, return to our investors. It checked out perfectly. So we put in an offer. And then about 3, 4 days later, I got a call from the broker like, hey, seller liked your offer, but somebody came in about a $500,000 more than you did. And I happened to be at work with my computer up, and I had my SDA, my underwriting tool, up in front of me. So I clicked. I mean, I knew what my offer was, so I added $500,000 to it real quick. And I looked at it and I said, "Hey, bud. So I'll tell you what, man. Whenever your buyer tries to retrade or backs out of your deal, I want you to call me first." And he said, "Wow." He started laughing. He said, "Why would he do that?" And I said, "Because right now, based on what I'm looking at, his returns are 0.01% at that price." And he said, "All right, man. Well, hey, I appreciate it. I've got something coming down the line for you. Closer to where we live. I'll get back with you pretty soon on that." I'm like, "All right, man. Well, I'll hire you later." Got the phone, and no kidding, a month later, he called me back. He said, "Hey, man, I don't know how you did that, but they backed out of the deal. Are you interested in it? Does your offer still stand?" And well, long story short, it stood, and we were able to execute the deal.
Yeah, that's amazing. And that's a lesson here where you speak confidently to the broker, number one, but number two, you stay in touch with those deals. I'd say probably like almost half of our deals are just like that. Stay in touch with the broker, fell through, and then you get it. Now, so once you have it on a contract, or even before, Ryan, how did you then go about raising the money?
Yeah, not to really downplay the effort that went into getting it to that, point, but we had started talking to potential investors, gosh, 2 or 3 months before, just kind of funneling them in, showing them a sample deal package, saying if we hit this number, can I just tell you about the benefits of investing with us or in real estate in general? Going over the benefits of the depreciation, the interest write-offs, the that appreciation and the value of the property over time. So we had a pretty good list of potential investors going already. And, what kept me up at night, honestly, was when we did have it in contract finally, because then it's like, okay, you have probably 30 days of due diligence where you can make up a reason to back out, sure, but you also don't want to go ahead and actually wire money to have your investors wire money to, some bank account, meaning it's leaving their account, like actually leaving their account into the investment account until, maybe 2 weeks before closing, because, time is money. They don't get to invest that on their own. And when it's with you, it's just sitting there unless you've closed on the deal. So in my mind, it's like, how do I tell these people, like, I don't know if I'll ever want to talk to them again if they don't follow through with what they say they're going to do, because it's about the call. If it would have fell through after earnest, after the money goes hard, I mean, on a $4.6 million deal, we're out $46,000 at that point, right? Well, that's a huge hit. So that's what kept me up. It was how do I know that they're going to follow through? But it really, for this particular deal, it just came down to talking with them, keeping them up to date, making sure they felt comfortable with it, and going, when it came time to open up, we use cash flow portal. When it came time to open up that investor portal, it wasn't maybe 3 or 4 days, and we had already had $1.5 million wired.
It's like one of those things where it's, without much effort, you raise millions in days. But what you said earlier is you've already been seasoning and talking to these people
Yeah.
with a sample deal package months before. And I think that really is the key to raising capital. If you hadn't done that, I don't know if you would have closed the deal. It would have
Right.
been.
Yeah, I mean, yeah, I would have had a heart attack or something for sure, just because of the stress. Yeah.
It's pretty cool. What else you want to say about this deal? It's just impressive what you guys did there.
Yeah. I'm not sure Russ has a lot to say about it. I credit him for this one, just by the way, he's kind of stuck with the broker. But it really, this was a sweet deal just because of the seller financing. Just somebody ready to kind of ride off into the sunset finally. Somebody that followed the real estate investment roadmap, right? And he was just ready to be done. And we happened to be in the right place and talking to the right broker. Um, and so seller financed at 6%. You couldn't beat that with any private equity or bank at the time. Um, Pretty much fully, yeah, it's probably, I think it was 98% occupied, something like that. So full occupancy. We knew the market well. Were close enough to the area to understand the attractiveness and the market. So all of those things make it a very, very good deal.
Can you share kind of the returns that you two are getting, like acquisition fees or cash flow or anything like that? Do you guys remember that from the model?
So percentage wise, we did 2.5% um acquisition fee and 2.5% asset management fee, and then 1% capital transaction. So in refinance, it's 1% or sale. But the asset management part is really valuable because one, you look at it like it's payment for your time you spend managing the deal, which we're very active in doing. But two, if you do it right, it allows you to go ahead and start to grow your team. So you can go find a VA or start to hire some staff to help you generate more deals or cover, the administrative aspects of having a deal under your an active deal and going and finding more or paying attention to other investors, right? Um, Actual numbers. So the acquisition fee turned out to be $115,000. So we split that. So it was a nice check at closing for each of us. I had my financial planner asked what the heck happened, like where'd that come from?
It's all.
Like that wasn't in the plan. I said, I don't know, so that was it. You experience that once, and the deal of the first or the law of the first deal kicks in no matter what, I think. But that is definitely an extra gallon of fuel, right? To say, well, if I did that, if I did a deal, granted, you don't just do them because you want the acquisition fee. You constantly have the investor's best interest in mind. I mean, that's first and foremost all the time because I don't think there's anybody, certainly on this webinar or in the syndication business that's successful that doesn't think that way. Because if you don't lose a little bit of sleep over, using other people's money to try to make them money, but you're responsible for it, you might be in the wrong business or you may not survive very long because you're not going to have investors, right?
So, Russ, what's next for you guys? I know you guys are currently planning on your, plan for world domination, but what are you guys thinking right now? What's next? What's some of your goals over the next year or so?
And Mike, we're pretty busy. I've currently got, LOIs in on a couple deals. I've got one that's going to be pretty sticky. I think I have a strong feeling of. Got a broker today that asked me to send one in for another one. We're in the process, the engineering design phase right now for building a 40,000 square foot storage facility near our hometown in an area that is extremely undersupplied. So we're very excited about that because we're able actually to build it on some old family property of mine, so we don't have to actually buy the land. So that deal alone in itself is taking up a little bit of our time. I was on the phone with a family member this morning that's helped managing some of the engineering process about environmental studies and such. But we're expecting a full design to come back to us within the next week. We'll have that to the contractor by the week after next, hopefully, and then hopefully be signing contracts and start raising money to break ground on that very soon. So we've got strong deal flow. I wish that I could keep up with the brokers as much as they still call me. We actually did have to bring on somebody to help us with that. We brought in a gentleman named Michael Spear that's been a godsend helping us on the multifamily side. So he's been enjoying the spoils of some of my old phone calls and buddies calling him now. But he's currently underwriting multifamily for us, and that's kind of taking a big load off of me to where I can kind of focus on the storage side. We're also executing a value add strategy on our deal, the Rockport the storage deal. We added 38 new spots, open parking areas there. And we've also we're looking into adding another 8 covered parking spots there as well that will substantially increase the value of the property by significant amounts.
That's awesome. Ryan, what are your thoughts about where you guys are going with the business?
Well, I mean, we're now partaking in the Dealmaker Elite program, so we're continuing on, our partnership with you, and feeling more and more like family every day, which is great. So for me, it's setting that foundation for growth with, this next portion of of what I would call, I mean, it's a program, but it feels more like just partnering and growing and learning from your experiences. And then for me, it's scaling the business now. It's what steps are next for being able to make this repeatable exponentially. That kind of thing.
That's exciting. This is, to me, this lights me up. Yes, getting into first deal is very exciting, but now you know it can be done. And now what's interesting is what can be done. Like, what's the potential? And the potential is enormous. So I'm glad you guys are continuing to work with us, and we're going to help you scale that too. Well, however large you want to do that. So Ryan, where can people find out more about you guys and connect with you?
So they can go to Sable Capital, so SABLE Capital, CAPITALTX.com /contact, or just go to the website and you'll see plenty of places to sign up for the newsletter. Or if you're kind of already wanting to get into real estate, either learn more about it, potentially partner with us, or invest in our deals, you can sign up as an investor as well and put even more information on there, and we'll be reaching out, or you can schedule a call.
Awesome. So that's sablecapitaltx.com. So check out Ryan and Russ. Hey, thanks so much for being on the show today.
Yeah, thanks for having us, Michael. Appreciate you and everything you've done for us, and look forward to what's to come.
There's several things that stuck out here with me here in this episode. Number one is the partnerships. And one of the reasons this partnership works so well is the way they've done their partnership, Ryan and Russ, right? So Ryan is more of the capital raiser. Now he's also doing the financial side, but he's more of the capital raiser. He's focused on that. He's accountable to it. And then and Russ is much more accountable for the asset management in particular. Okay, and so this is why, and also deal finding. And we talk about it a little bit on the show here that clear accountabilities are the key to a strong partnership. Yes, you have to get along, and you've got to be aligned around values and what you're looking for in life and things of that nature. So that's actually number one. Number two, though, is having clear accountabilities. Oftentimes, I see two essentially deal finders. They get together at an event, go, hey, let's partner together, but they're both deal finders. That doesn't help you, right? A deal finder needs a capital raiser, and a capital raiser needs a deal finder. You also need asset management, right? So having clear accountabilities and finding someone who is clearly aligned from a personality and capability perspective to those things is very important. Number two, if you do want to scale, then don't do this alone, right? And this is one reason that our students are doing bigger deals faster. The average deal size is $4 million, and it takes 6 months to get under contract. And I can tell you almost nearly 100% of students come in here don't come into pro going, you know what, I'm going to do a $4 million deal in 6 months. No. They'll go in there and say, yeah, my gosh, I could see myself maybe doing $1 million or $2 million, but they're not going, oh, yes, I'm doing a $4 million deal. And then yet somehow they do, and it's because they're working with a mentor. They're working with a team of people behind them who are helping them with underwriting, picking markets, looking over their shoulder to do a deal, helping put their team together. And all these things combined expand their comfort zone and get them into a larger deal faster. It's also the power of the network, right? Being able to now Ryan and Russ knew each other before, and that happens sometimes. Sometimes two business partners come in, but more frequently, a single deal finder comes in and we pair them up with a capital raiser, or the other way around. A capital comes in as ability to raise some capital, and now we align with a deal finder. So make sure that you're part of a program where you have access to someone who can look over your shoulder so you don't make the big mistakes, but someone who will also push you, and then has a strong network as well where you can connect with other capital raisers, other deal finders, and experienced operators. You need all those things when you want to get into this. So if you want to scale, make sure you don't do this on your own. And definitely check us out. If you want to learn more about working with us, then go to thefreedompodcast.com, and there's a resource for you there to book a call with us and explore what it's like working with us. If you're kind of new to multifamily and you're just kind of exploring right now, then if you go to thefreedompodcast.com, same place, you can actually access our Apartments 101 masterclass. And it's a great introduction into the world of syndication, especially if you're coming more from a single family house investing world. And what is a syndication? Why is it good? How does it work? And how can you make that pivot into apartments from more of a single family house investing mindset? So the Freedom Podcast might be a great next step for you. Also, if you are interested in more in passively investing, then go to thefreedompodcast.com as well, because there you can connect with our investing firm, Nighthawk Equity. So the one place you want to go to if you want to take the next step is thefreedompodcast.com. Either way, hopefully you were inspired by the story from Russ and Ryan and how they got started, formed this partnership, did this large deal, and now do want to scale to a very high level. So hope you were inspired by that. Catch you next time.